Owning a vintage or collector vehicle is very different from driving a standard commuter vehicle. Because of this difference, standard auto insurance is often not the right fit for a classic automobile. A regular auto policy is designed for vehicles that depreciate in value every year and are driven daily. If you crash your daily driver, the insurance company calculates its actual cash value, which factors in wear and tear. Classic car insurance, however, uses a concept called agreed value. This means you and the insurance provider agree on the value of the vehicle before the policy starts. If the vehicle is totaled, you receive that exact amount. Understanding the differences between these two policy types can help you protect your investment. In this guide, we will examine how these policies differ in valuation, usage limitations, and overall cost, allowing you to make an informed decision for your classic vehicle. The primary difference between a classic car policy and a regular auto policy lies in how the vehicle's value is calculated in the event of a total loss. Regular auto insurance relies on actual cash value, often abbreviated as ACV. Actual cash value represents the replacement cost of the vehicle minus depreciation, wear, and mileage. As a vehicle ages and accumulates miles, its actual cash value decreases. If you own a vintage car that has been restored or has historical value, a regular policy will not recognize these factors. Instead, it will treat the car like any other old vehicle, resulting in a tiny payout that does not cover the true worth of the vehicle. In contrast, a classic car policy utilizes agreed value coverage. Under this arrangement, you work with a specialized insurance provider to establish the vehicle's worth before the policy is issued. You may need to provide documentation, such as professional appraisals, photos, and receipts for restoration work. Once both parties agree on a figure, that amount is locked in. If the vehicle is stolen or completely destroyed, the company pays the agreed amount without subtracting depreciation. This structure ensures that your investment in restoring and maintaining a collector car is fully protected, giving you peace of mind that a standard policy cannot offer. Understanding this valuation method is vital for owners of collectible vehicles, hot rods, muscle cars, or vintage trucks. Standard policies are built for mass-produced passenger cars that are driven until they have little value left. Collector cars, however, often appreciate over time when kept in good condition. By securing an agreed value policy, you protect against the financial loss that would occur under an actual cash value model. This fundamental difference in valuation is the primary reason why standard policies are unsuitable for collector cars. It ensures that the true market value of your asset is recognized by the insurance provider. The second major distinction involves usage restrictions and how the vehicle must be stored. Regular auto insurance allows you to use your vehicle for any standard purpose, including daily commuting, running errands, and road trips. There are no mileage limits, and you can park the vehicle in a driveway, on the street, or in a carport. Classic car insurance operates under much stricter guidelines because the policy is priced based on the assumption that the vehicle is not driven regularly. Providers typically require that the vehicle is not used for daily transportation or commuting to work or school. Instead, usage is limited to exhibitions, club activities, parades, and occasional pleasure driving. Additionally, classic car policies usually impose a yearly mileage limit, often ranging from 2,500 to 5,000 miles. Some providers offer flexible tiers, but you must track your odometer to ensure you remain within the agreed limits. Storage requirements are also a critical factor. To qualify for a collector policy, you must keep the vehicle stored in a fully enclosed, locked garage or a secure storage facility. Parking the car on the street or in a driveway is generally not allowed, as these environments expose the vehicle to weather damage and theft. These rules protect the vehicle and justify the lower rates. Furthermore, most classic car insurance companies require you to prove that you own another vehicle for daily use. Every licensed driver in your household must have access to a regular passenger vehicle for daily transportation. This requirement reassures the insurance company that the classic automobile is truly a secondary vehicle used only for recreation. If you cannot prove that you have a primary vehicle for commuting, you will likely be denied classic car coverage. Understanding these usage and storage rules is essential before applying for a policy, as failing to follow them could result in a denied claim. Because classic cars are driven less frequently and are stored in secure garages, they are involved in fewer accidents and are less susceptible to theft. Consequently, classic car insurance is significantly less expensive than regular auto insurance. In many cases, a classic car policy costs 30 to 60% less than a standard policy for the same vehicle. This lower cost makes specialty coverage highly cost-effective for collector vehicle owners. However, to qualify for these lower rates, you must meet driver eligibility criteria, such as having a clean driving record and being over a certain age. Another key benefit of specialty classic car insurance is the inclusion of specialized features. For instance, classic car policies often include flatbed roadside assistance. Standard towing services can damage a vintage vehicle's drivetrain or suspension, so flatbed towing is essential. Additionally, classic policies may offer coverage for spare parts, automotive memorabilia, and vehicles that are undergoing restoration. If your classic car is damaged while in a shop being restored, a specialty policy will cover the value of the parts and labor invested. A standard auto policy does not offer these tailored protections, leaving you exposed to out-of-pocket costs. In summary, regular auto insurance is designed for daily transportation vehicles that lose value over time, while classic car insurance is built for vintage assets that require agreed value protection, limited mileage, and secure storage. While regular policies offer unlimited usage, they lack the specific coverages and valuation security that collector cars require. Choosing the correct policy type is vital to ensuring that your financial investment is properly insulated. By understanding the rules and benefits of each policy type, you can choose the correct coverage for your situation. Taking the time to evaluate these options is the best way to safeguard your automotive passion. Policy Plain English translates insurance jargon into everyday English. The channel explains auto, home, renters, life, and health insurance, covering how to read policies, how deductibles work, what coverage limits mean, and common mistakes that cost buyers money or lead to claim denials. We do not sell policies or offer personalized advice. This video is general insurance education, not legal advice, tax advice, or a recommendation of specific insurance policies or companies. Coverage details, rules, and exclusions vary widely by policy, state, and provider. Consult a licensed insurance agent or qualified advisor for your specific situation.